Hi everyone, welcome to this another video of Property Auction Hunters. In our last video, we covered the pre-budget analysis of what's going to happen and what we expected things to be. And now we've got the full analysis of the budget. We know what things were suggested by the Labour government. And in this video, we're going to tell you how things are going to be impacted in the auctions, in the property trading game, and what you need to know to basically prepare for all those things. So let's start with 5 major things that were introduced in the budget.
Yeah. So the first one, which I think is probably the one that caught most people off guard, is the stamp duty hike, what they classified on second homers, but really it's going to affect a lot of buy-to-let investors, flippers and traders quite heavily, which we'll go on to. The second thing is the national insurance contribution increase by businesses. The third thing is the capital gains tax increase, so non-property capital gains tax increase in line with the property capital gains tax increases. The fourth thing is the abolition of non-dom status or non-domicile status for tax reasons, which is quite a big thing and it's going to impact quite a lot of people. I knew some people that were actually away while it happened and kind of said if that is the case, they're going to stay outside of the country, which is interesting. And the fifth thing is inheritance tax relief adjustment. So inheritance tax has been changed and there's been some changes to how pensions are affected within inheritance tax. But taking those 5 things into consideration, Jay, do you want to kick us off? What's your thoughts? How do you think, especially things like stamp duty, how do you think that's going to impact auctions?
I think it's going to impact auctions positively from the position of a buyer. If you're paying attention to these things, you're now becoming more and more price critical. Now, we're already in an environment where a lot of investors have been retiring, have been selling off, have been divesting from residential, maybe going to commercial or divesting from those things and becoming developers, whatever it may be. My gut tells me that most people, if not all people, are going to take that additional 2% and just cut that off their bid price. That's something obviously specific for auctions, but if you extrapolate that market wide to real estate transactions, private treaty auctions, whatever, that is going to strip billions of pounds worth of value off of people's homes over the next 3 to 5 years. Billions of pounds worth of value. That isn't a tax grab on the ultra wealthy, super rich, Starbucks billionaires that are paying no tax in this country. That is a cash grab on everyday people who own a house that when they come to sell, all of a sudden are getting chipped on price, chipped on price, chipped on price. The flip side to this is maybe you don't care that you're paying the additional 2%, and well done, good for you. But I tell you what, if you're one of those investors that doesn't care that you're paying the additional 2%, it doesn't hurt you. Guess who it will hurt? The tenants with their increased rental. That's it.
Yeah, I mean, look, from a trading point of view, it's probably going to have the biggest impact because as a trader, our biggest frictional cost is stamp duty, or one of our biggest frictional costs is stamp duty, right? And I know one of our viewers was asking about, well, what happens with modern method plus the extra stamp duty, because that's 4.5% plus VAT plus one thing that people have to remember as well, not only has the stamp duty gone up for us by an extra 2%, the banding is changing on the 1st of April 2025. So where you used to pay, or where you're currently paying 5% up to 250, you'll pay 5% up to 125, then 7% from 125 to 250, and then you're paying 10% on anything above 250, which is massive. But just to come back to the reality, on a £100,000 house as a trader, we are paying £5,000. Sometimes that could be that could be your margin, that could be half your margin, that could be a third of your margin, but that's a significant amount of money now. So what we're doing differently as traders is we are focusing on where we can find stamp duty exemptions, right? So that's the key for us is anytime there's a stamp duty exemption, we're on it. Probate, part exchange, relocation, etc. There's obviously a whole host of them. Plus, we're looking at the lower end of the market, anything less than 40,000, which, let's face it, there's not going to be loads of stuff down south at that price point. There's going to be loads of stuff in the north, northwest, northeast, etc. at that kind of price point. And also when we're selling a property currently, we're trying to focus on stuff that appeals to owner-occupiers, i.e. 3-bed semis, etc., rather than stuff that just appeals to an investor or a developer. Because don't forget, not only are you going to pay that extra stamp duty, the buyer's going to have to factor that in. And if both people are factoring that in, that's just basically more discount that's required on the front and the back end.
Hi, I'm Michael Allison. I'm the Commercial Director at Roma Finance, and I'm delighted to tell you that Roma Finance have the Flow Bridging range, which is specifically designed for those fast completions, which will come in handy when you're looking at purchasing a property at auction. If you want to know more, please don't hesitate to get in touch. Thank you.
I see this as a massive positive for traders, right? In terms of impact, it's a massive positive because they're able to structure things in ways that developers, buy-to-let landlords, investors cannot. You do not have those exemptions for you. Those are almost exclusively trader-based exemptions. Funny enough, we've written an article recently for Property Investor News magazine where we basically spelled out this, what we've called a calamitous situation. But it's calamitous for some people, it's not for all people. But I think your point's safe, and it's one of the things we really like about how you structure things is exactly that. You're going, right, this is what it is. There's no changing it. You're not having an argument with anyone. Not that they'd listen if you could find someone who could change their mind about it. You've just gone, right, now I need to be able to structure this to be efficient. You need to structure this to keep those frictional costs down. Because the duty of a property trader is to bring assets to the market for people to live in, right? It's a hidden marketplace. And if you can't do that, and the government cannot build 1.5 million houses in the next 5 years, then we're going to be up the Ganges without an oar.
And also, I think obviously doing things efficiently is going to be really important. I think the target market for traders and investors will need to be now end users, and that's the key market, because there won't be that many investors. And basically, as a trader or someone who is about to flip the property, you need to be looking at what the market is that you're trading into. And at this moment, I don't see many buy-to-let investors coming out and saying, we want to buy properties as our pension. We want to buy property because it's a store of capital. I don't think that's happening much more. But what is going to be happening, obviously, people who, for example, are being affected by the increased tax rates and stuff. Some people can leave the country and go live somewhere else, Dubai, maybe somewhere else. But there will be, most of the people have children at school, they have ties to the country. They will just live with those increased taxes. And basically what that also means, the same with properties and stamp duty, they will just, when they need to move a house for school reasons, for family reasons, because they outgrown the house, they will have to just find those extra pounds from the savings or from some other assets that they own, and they will have to they will pay. And I think as traders and people who are looking to buy properties to sell, that's the kind of market that you need to be looking at. And
don't forget as well, Piotr, the biggest thing that you got a stamp duty exemption on as a trader is back-to-backs.
yes.
So that's where people are going to have to get more creative, try and push things on, and try and basically get a better structured deal that allows you to basically structure the exemption of the stamp duty, obviously for sub-sale relief. But this is where creativity comes into play. And we're already, I mean, I was on the phone the day of the budget, and the minute that she announced the stamp duty, the absolute minute, I was on the phone to my solicitor. I think she was in the park with her kids. It was her day off. Said, you're probably going to have to get back in the office on this one. And we pulled forward whatever we can do to exchange it that day. That was just being reactive. But I think post being reactive now, we've just got to focus on what we can control, and that's finding stuff where you've got stamp duty exemptions or can reduce it as much as possible. And I think Adam mentioned, if anyone that read the supplement, Adam mentioned some really good points about discussing things like buying limited companies. You've got 0.5% worth of stamp duty that you're paying. And then obviously you still get non-residential stamp duty when you're buying 6 or more properties or commercial properties as well. So that is probably the best tips you can get for today, really, is how to avoid or reduce your stamp duty.
That's right. I think that also is important for people who, again, if you're looking to sell a property, it's really important to know that you might be able to sell the company that owns the property and the shares in that company. But for that to happen, usually the due diligence process is much more strict, and it's really important to have all of the paperwork in place when you're looking to sell something. So I would say those are really important things for people to pay attention to when they're looking to enter into a transaction. So, what do you guys, are you still buying, or are we closing the shop?
We're definitely
Still
buying.
buying. Still buying.
Come on.
Definitely buying. I think I did a calculation of if we completed the pipeline that we had, not the ones that we had exchanged on, but the pipeline that we had, it's going to cost us an extra 150,000 in stamp duty, which is, when you think about it, that is a very significant amount of money. That is straight from the bottom line. So yeah, we've had to have those conversations. Some conversations we've had to reduce it by that amount. Some conversations we've kind of split the difference. But ultimately, it's not coming from the buyer's pocket. It's not coming from the government's pocket. It's coming from your pocket, or obviously the buyer or the seller's pocket. So you've just got to make sure, one way or another, the deal still stacks regardless. So
that's right. Someone has to sell it. Yeah, absolutely. Well, we are selling now a block of lots for one of our clients in the auction. And one of the things that we're kind of drawing everyone's attention to is that this is a block of more than 6 flats. And because of that, if it's handled in one transaction as one thing, that qualifies for non-residential stamp duty. And the difference in stamp duty, if someone was to look at it as a residential property versus non-residential, is approximately 80,000. It's basically about 11% of the value of the property, which is huge. And
crazy.
It's being aware of those little things is really important. And I think staying in tune with channels like ours and other channels on YouTube, where things from real life property investors, real life traders are being shared, is really important, especially nowadays when things are changing. So make sure, guys, that you subscribe to our channel and follow us for more news. And there will be more videos coming up, and we are actually planning a super interesting series that will be released from December. So make sure you subscribe below and hit the like button, and we will see you guys in the next episode.